Hey there, Russell traders. David here of TradingFibs.com to bring you the Russell recap for January 30th, 2014. Take a look back at the market on January 29th, FOMC day. Today, jobless claims and GDP data came out. As always, please seek financial advisement when trading with your money, as these videos are for educational purposes only. To support your knowledge in the market, see what's going through my head on any given day. Please always make sure you have a solid trading plan and never move your stop when placing a trade. Let's jump in right into the four major indices. As we can see, we had a lot of morning chop today on all four, only to give rise in the midday session and then come down in the last 20 minutes and give that all back. Yesterday being FOMC, expected a little bit of a chop in the morning session, as we can see on all four here through the 25-minute open ranges, as I had tweeted throughout the day, offering on the Russell two trading opportunities underneath the ranges, 1 and 2. We'll go over those in a little bit. Jumping to the market internals, we could see today the bias on the green side, yesterday the bias to the red as the AD line under negative 750. Here we have a selling off, so any buying opportunity really yesterday in trend I had red all around, so opportunities to the downside was in my favor. And then today we were all over above the 750, indicating a buying opportunity, and had some wonderful jump there today to the monthly pivot, which we'll review in a little bit as well. So green all around today, very interesting. We've had a mirror image flipping all week, down up, which is really just been an on-off switch. Which side of the price action we're going, waiting for that 25-minute open range to set up and jumping right in. Let's go ahead and jump into some pictures I had posted all day on Twitter yesterday for the Russell. As we could see on the morning chop here, no price action above the 25-minute open range, really keeping in between the zone here. My discipline of waiting for momentum drives above the range together with the Heikin Ashi candles and the exponential moving average. So here, morning chop, finding support on the post 30-minute pivots, sitting in between the 25-minute and open range high, daily pivot and gap of above, which would be a no trade zone. So first trading opportunity for me would be anything that would jump up high. But again, and remember, the market internals on yesterday on the 29th were all in the red under negative 750. So that any movement that I was looking for was really to the downside during the day. So as we could see, as the morning session went by, price action again, not breaking the Camarilla I believe this was the L4. I don't quite remember. It could have been L4 or H4, and I don't recall that. I apologize here. But either way, price action staying underneath this range. And the first trading opportunity that was possible was actually here on the price break to the upside, where a Fibonacci extension I had drawn, and that would be a technical entry with the daily pivot up above Fibonacci targets. But remember, the market internals was keeping me in check, and as we could see here, price action was falling to the downside, as there would have been two perfect opportunities on any other given day. But again, price action, no momentum here. As the day went on, here we see a falling price action crossing over the EMA, fib setup becoming invalid as price action coming under the EMA, the 5 coming under the 34. Here we have some nice Heikin Ashi sell. We're coming back inside the range. Technical entry for me would usually be under the 25-minute open range here, 1 hour open range low. Again, early entry could have been here on the price action break underneath the exponential moving average. The AD line with all market internals in the red at 983, 1052, showing a sell-off here and eventually coming all the way down to the bottom of the 25-minute open range. So again, this would have been not a bad entry in the morning session pre-FOMC. Again, for me, my entry would have been looking for underneath the 25-minute open range. So no trade of the day yet on the 29th. FOMC minutes coming out. Here I see, again, the price action bounce up, drawing a Fibonacci extension on the retracement. I now have my target set, and my AD line market internals are in the red, with AD line now at under 750 at negative 1300, becoming more of a short signal. So looking for entry underneath this 25-minute open range. Taking the entry, as we can see here on the dome, at 1121.6 with the first target. Only taking 2 contracts for me, and right before the target was hit, my stop in place, and 2 contracts coming off for a little profit there for the day. Again, as the morning session is now coming to the mid-afternoon, FOMC minutes jumping up all over the place. As we can see here, the wild swings. I'm already out of the action, waiting for the market to settle. The next opportunity, as we can see here, price action coming back up here to the 30-minute pivot line. Really the line in the sand in the 25-minute open range. My next buying opportunity, or short, I was looking for a short in the session as the market internals were still in the red and becoming more to the short side. So multiple attempts here at the 30-minute pivot, waiting for a re-entry. As we can see, the Heikin Ashi candles, solid body with the tail under the range, and here would have been a nice opportunity to enter underneath the 25-minute open range. And contracts off, we're looking at a major line here of resistance to the downside, support to the upside, monthly S1. As we can see, price action actually did bounce back up, and coming back down a little again to monthly S1. Next target would have been 1114.1. And as we can see, price action really did settle here at the monthly S1, finding support, and eventually ended up crossing back to the upside, the EMA breaking, and so the trade is over. So the first trading opportunity before the FOMC, which was a great setup with the AD line decreasing in to the short side. Market internals really driving that down, and here we see the EMA break trading over. This was the second trade opportunity, as this trade would have been finished. But again, this is after FOMC minutes, multiple attempts here, crossing to the downside, second trade opportunity through the session. So jumping into today's opportunity for trade. One other thing I wanted to go ahead and share was using one of the indicators that I do use as well is the 4 EMA, which is a 5, 13, 21, and 80. As we can see here, this is the 29th here on the left-hand side here of the open ranges. You can see the overnight market really had it right in selling it off. And what was a huge indicator for me of knowing if the market, I don't seem to be able to get this to open up here. So one of the other things I use is a 5, 13, 21, and 80 exponential moving average, including the 534, which showed here on the previous day, on the 29th, the price action, when the 5 comes under the 13, 21, and 80, that is an indicator for me that direction is confirmed. As we could see here in the morning session, as price action did break down here, the one entry that I did take was very short here. It didn't last very. This is FOMC minutes here, jumping up and down. But the slight entry that I did take, I already had a 5 under 34, and I already had the 5, 13, 21 under 80. So that was a indicator that the short was a better entry. And the second entry that I had gone over in the pictures just before here is seeing that the market once again was in the red, and here we have Heikin Ashi selling off. The 5 crosses the 34. Technical entry down to the monthly S1, looking for some resistance to the downside. And here I already had a 5, 13, 20. The 5 is already under the 13, 21, and 80 here. And so that is a confirmation that I am headed in the direction I want to head for a technical entry. So we'll take a look at how that helped out in today's market. As we can see, we had a nice jump to the upside just on EMA crossover alone. Again, if we remind our reminder that today's Market was in the green on the market internals. So again, early entry could have been inside the range. For me, I wait until I'm outside the 25-minute open range. I'll show you why I hesitated at first. But here we could see, again, a lot of green triangles showing market internals were really to the upside today, closing a lot above the 0 line. And here we see market breadth really in the green, opening up in the green. So green, green, green all around today. So anything that was going to bring me up was anything above the 25-minute open range or 1 hour open range. So here we have market internals at the beginning of the session. We had a drop down, but again, market internals are all in the green. We're already starting up at 1333 here, strong on the NASDAQ and the NYSE. And then moving along, we could see that open ranges were set. No action outside the open ranges. This is about post half hour, 25-minute open range. We start to see a dip to the downside, but again, downside movement was not supporting the market internals to the upside. Here was the first trading opportunity on the Russell, as we could see. Price action. Here's my Camarilla H4 line. I could see my 1 hour open range up here, signified here also on the Camarilla. I already have the 5 above the 13, 21, and 80. But again, I want price action to break these two lines here before I actually enter into a trade. Again, a lot of times I do teach to just jump on the entry above the 25-minute open range, but I was looking for the momentum drive here. This was not a momentum. As we can see, price action did chop. You could have sat on this, placed a stop here at the top of the 25-minute open range, and you would have been safe. But again, I had a pivot line, I had a Fibonacci target here. So again, looking for that push above, which eventually came above fib target number 1, placing a stop and taking some contracts up off along the way, moving the stop as the drive did continue up. As we can see, fib target 2, we have a crossover on the EMA, as simple as an exponential moving average Heikin-Ashi buy signal here. We could see here on the 534, 513, 21, 80, both confirming a trip to the upside here. We hit fib target 2. We have a bounce down. Here we could see once again taking contracts off at each level. Here we see the market indices already, the Russell really leading the way. So there may be a little hesitation on the others, the NASDAQ following suit. And as we can see, market internals still in the green here and rising, still finishing much above the 0 line, AD line still at about 1400. And here we go to fib target 3. So really rolling the trend up. Looking up above here at monthly pivot was actually the target, as I had tweeted throughout the day. The 5 above the 13, 21, 80, confirming this trend on the upside, just taking contracts off along the way, moving the stop to each previous target. As my rules have indicated. So a nice really tip, almost 1 tick shy of the monthly pivot here, which eventually it did come up to the monthly pivot. The market internals very strong. I believed price action would either remain up here, maybe push to the upside a little bit. I didn't know. But this would have been the point where maybe some hesitation came in the market. Not enough, obviously not enough buyers up here anymore, wanted to take a rest. Who knows? But here we see pretty much the end of the move, 161.8 Fibonacci target level, which happened to be the monthly pivot. So a nice jump above the CAM H4. 1 hour open range was the entry right above that. Fib target 1 was the entry. And that was the momentum move as price action was confirmed on both line above 534 and 513, 21, and 80. Here we see market indices hesitating at the tops of the day. Market internals still in the green, indicating the strong buy. Here we see market pivot really did hold for the most of the session for about 2 hours and holding above the ranges until eventually towards the end of the session we see a price action drop. Here we see the Russell on the 5-minute bars turn to the south. The question is where and how far the south will become. So looking at a retrace here, Fibonacci retracement to the 38% line, seeing if we were going to hold this up here. The only way that price action was going to hold up here is if we would have a strong momentum above the monthly pivot. That was the only way that I was going to enter this trade to fib target 1. All indicators showing EMA crossover. Heikin Ashi buy signal with strong buy here. Market internals are still in the green with the AD line at 1425. I have Fibonacci target set up above, but the only reason I was holding back is the time of day, and with a monthly pivot above that was already showing some resistance, there was no way I was probably going to get into this trade. And sure enough, market action eventually did turn around south and was not able to hold. And we can see here that it turned around, never breaking the pivot line, and my strategy to hold back worked out, and eventually came down all the way to the 30-minute pivot line, post 30-minute pivot line inside the 25-minute open range, and set up for a nice short for anybody who wanted to get in on technical entry to the downside here. Would have done that on the tick, which we had here in the last 15 minutes, a nice drop down to negative 1,000, which dropped down to the post 30-minute pivot. Again, you can find all these charts that are on my on StockTwits or on TradingFibs.com. Again, really nice trip to the upside here, taking targets along the way on the Fibonacci management, or just whatever trading management style you had, and then eventually the turnaround here, not being able to break the monthly pivot, and as we could see, the support of the 5 under the 13, 21, and 80 to the downside. I did not take the entry to the downside. My preference today was with the market trend and the market internals in the green. I was only focused on anything to the upside. This concludes today's wrap. Feel free to stop by at TradingFibs.com or any of my social media outlets to obtain more information. My trading mantra, know one thing, know it well, rings true for all markets, whether you trade the ES or any other. My plan will always keep you disciplined. You can find me every day on Twitter at TradingFibs. And as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. Hey, everybody, have a great day, and I will see you tomorrow.